multiple registrations, ERP solutions, credit mechanism for existing stock, retailers are struggling for clarity as they gear up for the July 1st implementation of the Goods and Services Tax. Hello and welcome to BloombergQuint. You're watching the fine print on our special series, the GST Countdown. We're coming to you live today from the Goregaon store of electronics retailer Vijay Sales and here in Mumbai. And to help us understand how Vijay Sales is gearing up for the GST implementation, I have with me their Managing Director Nilesh Gupta. Nilesh, welcome to the show and thank you for taking out the time to speak with us. Let me start first with the simple stuff. You have stores outside of Maharashtra as well, I believe in Gujarat and New Delhi. How was the registration process for you?
The registration process was quite smooth. So because you have to register in all the states. So technically we are present in 5 states, Maharashtra, Gujarat, Delhi, Haryana and UP.
Right.
So registration process was not a problem at all. I think the first steps well taken.
Okay, all right. So we have an important sort of meeting coming up this week on the 18th and 19th of May, and there I believe there is an existing the clarity on transition stock or existing stock that may get finalized in the transition rules. Help me understand what sort of clarity are you looking from the government? In
fact, the most important is up till now we are all on the VAT regime, and in the VAT regime each state has their own VAT rates. So for example, in Maharashtra we have a VAT of 13.5% on all the consumer durables, whereas in UP and other places 12.5%, in Delhi, Gujarat is 12.5%. Now when we move into it, so what happens to all the stocks which we are carrying on 1st July? So how the input would be taken care of? That is something which will be taken care of. I think all the retailers and all the industry people are sure it has to be taken care of, but we are waiting for the clarity on what grounds and how much input and what basis are they going to give us the credit. Okay, so the draft rules, if I remember it correctly, do give us some insight into it, right? So where they have said that if you don't have the duty paying document with you, you will get 40% deemed credit on your CGST and the SGST. Is that a rate that you're happy with? In fact, what we are looking out as is the input should be 100%. Why should any retailer or any businessman suffer a loss because of the transition? So unless until the entire thing does not come, and documents are always going to be there with the people who are doing clean business. So I think documentation is not a problem. Neither do we want extra input, nor do we want input to pay extra. Exactly. So where you're saying that the duty paying document is there with retailers, there you're anticipating that you'll get 100% in credit. Exactly. Only thing is there's a possibility that they're talking about any goods which you're having more than 6 months, possibly there the credit may not come. So I think everybody is now busy of clearing the stocks which are aging above 6 months. Yeah, I was coming to that point that how are retailers reacting to organize their transition stock? Are you sort of trying to sell it, and can we look for some good deals here at Vijay stores? Deals are always there in electronics, so that's not an issue. But yes, the prime focus is to keep as much less stock as possible as you enter on the date, because that is very important. But at the end of the day, you are running a business. Right. So there's a minimum stock which you'll always have to carry. But only thing is, whatever excess stocks at times which we carry, we are trying to reduce that. And I think that's the aim for all the retailers across. Okay, understood. Another sort of important aspect is the rates, Nilesh. While you mentioned that more or less retailers have a ballpark rate in mind, help me understand within your product pipeline, what are the rates that you are still sort of unclear about, or you haven't been able to take a call on it yet? See, I think most of the categories in our consumer durables, I think the rate is going to be 28%, because currently also you see it's a 12.5% excise and 12.5 to 13.5% VAT is there. So all put together, it will definitely fall into the slab of 28%. Which I think is a still better rate than the 30% effective rate that you have paid so far. So I think it will all fall into that. Now only question mark I think is going to be on the computer part, laptops, digital products, because which currently is enjoying a rate of 5%. Right. So whether they will continue keeping it at 5% or they will take it to 12%. So that's a very big question mark. Okay, and within these, I think ones which are priced at the lower band might have maybe a lower rate versus somebody who's priced at a category which is priced higher will have a different rate. Possibly in mobiles they may do that. Right. For a 5,000 below mobile, they may possibly do 5% rate, and above that they may take it to the 12% rate.
Okay, all right. You mentioned that besides, I mean, while rates is an important sort of announcement that we're all waiting for, help me understand how is your technology going to work? Are you prepared technology-wise to sort of make everything digital and upload every bill of yours? And how is your ERP solutions planning coming along?
See, we are already digital. All our bills and all are there. Now, only question is, our ERP people, contractors who are doing the software, they are already in sync with the government and they are trying to take all the APIs and all what is possible. But the biggest issue as of now is, these are all the drafts. The actual law has not come. The actual way the process, interstate, how the goods will be transferred, intrastate, how it will be transferred, how is the billing going to be there from the manufacturer to the retailer, how will retailer bill to the consumer, all those things are still under discussion, and these are the probable way it will be done. There is no sure shot. So, no software person can start doing the work accordingly. I think in the coming council meet, GST council meet, I think this clarity will come in, the laws should come in. Once that comes in, I think the software guy team is ready to roll it out.
I'd like a little more clarity on Nilesh on this software part, where you mentioned that there is a separate team within. Is that a part of the extension of GST Council, or is it a government appointed team that is helping retailers to put in place software?
Yes, there is a government appointed technical team,
right,
which is talking with all the software developers. They are having constant meetings along with them, because see, in the GST thing, everything is going to be uploaded on the, and it will be visible to all. So when I'm buying from a brand, say I'm buying from LG, so whatever bills have come to me and how much GST they have paid, it will be visible to me when I go on the site. So I think they are all the software guys have been talking with the government appointed body on the commonalities of the software.
Okay, and how long do you think this process will take to be put in place once, if at all, assuming that they finalize the rules in this week's meeting?
See, if they finalize it and if they declare July 1st is the deadline and we are not going for 2 months postponement, then I think nobody has an option. Okay. Everybody will have to burn the midnight oil and close it.
Okay, and if I have to ask you, what percentage of readiness are you at currently?
It's very difficult to say, because till the time the laws don't come in, we are ready to be ready, but not ready also. Okay. So let the laws come in. I think, see, and looking at the way the government is functioning, I think July 1st will happen.
Okay.
Because everybody is feeling it won't happen, otherwise by this time it should have come. So, but I think there's a lot of work going on, and we also want it to happen, because if it happens in July 1st, so by the time we enter into Diwali season, things will stabilize. Okay. If it gets beyond delayed for 2 months, then during Diwali we will have a transition period, and those teething problems will be there.
Which might not be good for business.
Yes, so exactly.
Okay. Another business point that I wanted to discuss with you, Nilesh, is that a lot of warehousing strategy will change once GST comes into effect. Have you started that process yet, and do you anticipate consolidation of warehouses for Vijay stores?
Yes, what would happen is, with the GST coming in, the movement of goods will be very without any hassles. Like in Maharashtra, if you see, if you have to get it into Mumbai, you have to pay the octroi. In the other parts, in Dombivli and all, you have to pay cess. So the movement will be unhindered. So in that case, what the strategy would be, you have a very big mother warehouse in Bhiwandi, where your warehousing is cost is cheaper, real estate, and in the city. Ideally, you should not have a warehouse in the city, but because of the traffic conditions, you will need a warehouse in the city. So possibly you can reduce the size of the warehouse in the city and increase the size of the mother warehouse. And going forward, once the infrastructure improves of the overall country, then possibly you may have a centralized godown facility, maybe at Indore, maybe at Nagpur, which can cater to the most of the country seamlessly. But that's, I think, a far-fetched, another 5 years from now.
Okay, and was there any difference so far or incentive rather for you so far to set up a warehousing facility in one state vis-a-vis other, and is that going to change once GST kicks in?
No, I don't think so. For warehousing there was any incentive. The incentive was only if you are setting up a factory for production.
Okay, understood. Okay, another important point which will come into play for retailers is the promotional strategy, because any supply without consideration will attract tax once GST comes in. What kind of promotional strategy changes can we anticipate?
In fact, we are waiting for that final paper to come in, because that will design how the strategy will change. Because if you see in consumer durable, there's always, you buy an apple and you get a cherry free. So we have to see how to marry the apple and cherry in the GST regime. So we are just waiting how see ultimately what would happen is in the GST regime, then the apple will also have to be built and cherry will also have to be built. So only thing, consumer mindset will have to change.
And also ascertain which is the dominant of the two,
exactly.
and then GST rate will accordingly apply.
So in that case what will happen is you will have to have an apple and cherry from the same rate basket. Because if you are taking one at 12% basket and one at 18% basket, and if to apply it at 18%, it's not going to be feasible under any circumstances.
You're going to give a Samsung fridge free with other Samsung. It has to be clubbed with a smaller Samsung product,
so it will.
It won't make business sense otherwise.
So it will depend upon how you do it. No, see what happens is normally what are the freebies? The gift items, luggage items and all. They may be at the 12% category.
Okay.
12%. If they are in 12% and Samsung refrigerator is at 28%.
Right.
So on the product which you are giving free, you are paying extra 16%. So that also actually from where it will come. So possibly you may have to reframe the schemes and all.
How you will do that? Will it increase prices in any fashion? Because effectively, you are going to want to pass on
that's what I said. Then the schemes will have to be changed. Possibly you'll have to find something which has the same 28% rate.
Okay.
Rather than giving something and paying on the higher price, because ultimately the money is going to come from the consumer. The scheme which is added is a part, yes. In most of the schemes, the brands take a hit, the retailer takes a hit. But at the end of the day, nothing is free. There are no free lunches. So I think this is also one big strategy change which may happen once the GST comes into.
Okay. Besides the points that we've talked about, do you want to touch upon any other point that you are seeking clarity from the government at this point in time?
I think the most important thing right now is in the next GST Council, everything should come out neat and clean.
Right.
I think that's what we are looking out at.
Specifically in the rules, did you have a problem with any of the draft versions?
No, draft version seems fine,
right.
But most important is the draft has to become a rule, so you know, yes, this is the way forward, and the rates should come in. Rates is still okay. See, even if the rates come after 20 days, it doesn't matter. You just have to put in the rates as an end. But the rules are most important. How it's going to function.
Okay, all right, Nilesh. Thank you very much for sharing your thoughts on how Vijay Sales is preparing for the GST implementation. Thank you so much for watching.